Hello, hi. Yeah, hi. I'd like to share with you today a bit about high growth companies. As you can see, the last week, all the FANG stocks has come down, and Amazon also have reported future quarters whereby their growth is only around like single digit at around 5%. So, are we looking at the final ultimate slow growth or value stock kind of growth, single digit for FANG stocks, which are likely to happen, which for Amazon as well as which they have given guidance at 5% among one of the big FANG stocks. So just want to show you Trade Desk again, which of course we are all looking at stocks that are trying to find stocks that has great growth, at least double digits, at least 20% year over year kind of growth, which I think are very important to be able to identify this kind of stocks that has potential for 10x. Trade Desk is definitely one of them. It's a platform, a centralized platform for advertisers where it's actually quite big now for big conglomerate companies, like pharmaceutical, Procter and Gamble, and all that. What they will do is they allocate, like, let's say 100 million or 200 million, and then what Trade Desk will do is they will go into different platforms. Could be a bit on TikTok, a bit on Facebook, and a bit on media that you can see in Roku television or Amazon television and all that. So they are pretty quite interesting, and I believe they are actually the number one player right now. They have a very great, good client retention of 95%, which is an amazing, So you can see, turning now to our outlook, the year has started out strong, and we estimate Q1 revenue to be at least 303 million, which would represent growth of 38% on year-over-year basis, slight acceleration over the prior year. So they are giving out a very positive guidance as well in terms of 2022. So this is all pretty kind of great company to go into, where you can find companies that have double-digit growth. So Trade Desk is definitely one of them. I just want to show you about their year-to-year revenue. You can see they've increased 400 million, 600 million, 800 million, and 1.2. So this is a very healthy growth company. Of course, you can see the cost revenue also go up from some um, acquisition or cost stocks compensation and all that. So they're actually doing well, and of course they are still a growth company. You don't see EPS yet at this present moment, so something that you want to take into account as well. And one that you need to take into account when you look into growth stock is their cash flow. This company still got about 151 million in their cash position, so they are doing pretty all right. They are not something that you will see that they will need to raise funds immediately within the next few quarters and dilute shares um, by issuing new shares to raise funds. So they are doing something called the open internet, which is a fundamental network neutrality concept in which information across the World Wide Web is equally free and available without variables that depend on financial motive of internet service providers. They are very different from Facebook in the sense that, as you can see, with all these privacy settings coming up, Facebook trying to see and intrude into your consumer behavior, and to kind of like target advertisement in that manner, whereas Trade Desk is actually working on a very different approach. They still based on data, but at least they don't actually creep behind you and quietly to get information that is you may or may not authorize. So, um, so as you can see, many companies are spending a lot on commercials. Robinhood is one of them. They run on cable TV, not just on social media. So so other things that I needed to share with you is Google started this thing called the open bidding, allows you to invite third-party demand partners to compete to your inventory in a single auction in real time. This is something that basically is another way to buy data, but via Google's open bidding concept, which Trade Desk are not really very happy about it, and they started their own some app software. I mean, a data method called Solima. So because they felt that they have more data than other people, so they are actually bringing in demand more than more value to Google, unlike a brick and mortar advertisement company, right, where they will need to buy outright this kind of data. So um, Trade Desk Solima is a trading empower buyers of advertising, announced the launch of new trading platform that will help marketeers optimize their digital advertising campaign across the open internet. So this is something that you need to know. What does Trade Desk do? Supply path optimization efforts have been underway for years. OpenPath has been described as a hub that provides advertisers with direct access to premium digital advertising inventory, which is primarily meaning data and consumer behavior, and help to minimize waste for advertisers while maximizing revenue for participating publishers. So as you can see, this new way of actually using data and managing data for advertisement looks like the new way and the preferred way. As you can see, Google ecosystem and Apple ecosystem are clamping down on Facebook and all that for all these things called the tracking, right? So it's important. So other things that I wanted to share with you is in a recessionary environment, what would be the spending that a company would go for usually? Advertising, marketing. Means because sales have slowed down, they need to increase their sales. So this is one of the industry that you can look into, which is an advertising stocks. So what do they do? I will probably just show you a couple of things that
reach women between 25 to 34 living in the United States. Percentage of the client's advertising budget. They also offer additional services, but their primary source of revenue is their platform. Since 2015, the company has grown its revenue by over 20% every year. In 2020, the company expects to generate $807 million in revenue. And in 2021, the company expects to exceed $1 billion in revenue. If we look at their quarterly report, we can see that their revenue took a small dip in Q2. But that was due to the global health crisis, and revenue has picked up again. Institutional ownership stands at 68%, and in 2020, institutions bought shares worth $14.24 billion and sold shares worth $4.5 billion. Just in Q4 of this year, institutions purchased $7.4 billion worth of TTD shares. This tells us that they believe in the company's future potential and are buying up shares regularly. My main concern is about the uncertainty in the economic outlook of many countries. If we see some sort of prolonged lockdown, consumers will spend less. Companies will also start reducing their advertising budgets, which will reduce the trade desk's revenue, and that will definitely cause the share price to drop. If you decide to invest, after you do your
Yeah, well, this is actually the two sides kind of coin, where you can have two different opinions on this. Whereas I differ on their opinion on people reducing on advertising budgets, especially when sales are slow. So, I just want to show you a bit about this as well.
Going to. How about counter positioning? So this is an important one on two different aspects. One, the competition typically buys up ad inventory and sells it to the brands or the ad agencies and sells it at an inflated price, and they're able to collect a spread. So it's part of their business model. The trade desk doesn't do that. it doesn't make any money off of a spread off of buying ads and then reselling them. And because of that, if someone tried to copy what the Trade Desk was doing, they would have to give up a significant revenue source in order to do so. So that's one counter-positioning benefit. Another is that some of the companies that tried to do what the Trade Desk was doing, they decided to go right to brands. So let's say they wanted to go to Procter & Gamble. And they went there, and what they found was that Procter & Gamble would say, yeah, sure, but I've got an ad agency, talk to my ad agency. And the competition wanted to cut the ad agencies out. The Trade Desk decided that instead of doing that, they were going to work with the ad agencies. So not only did that help them accelerate their revenue, it also helped them create really good relationships. When a lot of people were trying to cut them out, they said, hey, you can work with us, and we will make life better for us and for you. And it has really led to a lot of business growth.
It's amazing how those business model decisions can really pay off down the road.
Yeah, so you can see basically Trade Desk is like an ad agency with a platform and a software that supports it, which makes and also cuts out the all these professional fees by ad agencies. So it's actually very hard for other companies to emulate, to copy Trade Desk business model. So yeah, so just want to share with you that Trade Desk will also stop buying ads from clients through open bidding concept, and they started their own software called the Solima that I mentioned to you earlier. So okay, what else that I need to share with you? This is the current share price right now, and I believe that it's doing a consolidation right now, and there's still potential upside for the company. So yeah, I hope you like the video, and basically, and we'll try to see whether if I find any good companies to share, I will update to you again and on this video, on new videos. Thank you very much, and please click a like to the video and subscribe to the channel. Thanks a lot.